Good afternoon, ladies and gentlemen, and welcome to this week's trade review, or as I'm now calling the programme, When Grown Men Cry. Obviously, my second negative week in a row. Just looking back at some of the stats, as I mentioned in some of the comments to you earlier in the week, I'm not really one for looking for excuses, but I think sometimes it is important to put the negative weeks in the context of what's gone before. So we've been running this under Bull and Bear for about 38 weeks now. So this is just the 6th week that's had a negative return. For those of you who can see close-ups of my head, you'll see that I've just cut it in the last couple of minutes. So I apologise for that if it looks like more carnage on your screens, but I was rushing back to get back to start the broadcast. Somebody was cleaning up in the offices that we rent, and I jumped over the Hoover and headbutted one of the electricity things, and it split my head open. So I am doing this just to cap off what was been a negative week. I've managed to crack my head open as well 30 seconds before we start this, so I apologise for that if people have blood on their screens. So the markets obviously have been in turmoil all week. We have the election next week. Trump and Biden go head to head, and they're at the moment, if the polls are to be believed, Biden probably has the upper hand, but I think last time around everybody was expecting Hillary Clinton to win the election, and Trump obviously did so, and there is a chance that he will be returned, and I think the markets are likely to react in a number of different ways over the coming week, depending on what the outcome is. We've obviously seen a lot of stimulus fatigue this week, and people or investors starting to de-risk ahead of the election in the next few days. So markets at the moment, this morning we saw a big sell-off. When we look at the Dow, we saw a sell-off back down to just below the 26,000 level. We recovered from there and have rallied all the way up to about 26,500, or just shy of 26,500. And then again, just in the last hour or so, we've been back tested about 26,050 and have recovered a little bit from that point as well. So in terms of the results for the week, as you're going to see, I think I've brought that up on the wrong screen, so I'll change that over. The results are significantly negative. Wednesday, you'll see that there's not much information there. That's not to hide anything. The overall numbers are there, but the number of trades was excessive, and a couple of things that I want to talk about. Obviously, the grey line that we signify across the middle there, about 15-16 trades, is the area that signifies over trading. I think when I counted the number of trades up for Wednesday earlier and was starting to put those in, I would have needed to almost treble the number of trades that we normally show on the screen there, and that would have been quite awkward. So I hadn't updated, or I wasn't updating the trades during the course of the day on Wednesday, and didn't just overtrade, significantly overtraded, and the visual cue which I use, which is that grey line, to indicate the possibility of overtrading, didn't really trigger in my peripheral vision, and for that reason, I think because I'm trying to look for reasons all of the time about things that occur, that's what's led to the large number of trades that I've seen on or that I've executed on Wednesday. So that's something that, for me personally, that I'll be looking to change going forward. Apologies, I can feel blood running down my head as I'm speaking to you, so I'm trying to I'm trying to look after that situation. The trades in gold, there were a few things that I did during the course of the week. Over trading obviously was one of them, and you can see that. I think when you look at Tuesday's trades, you look at what Thursday and Friday's trades, yes, I've gone through the grey line. The trades have been significantly smaller, so that is one reason why I'm happy, or I'm not happy, but I'm accepting of the fact that I've gone through the grey line, whereas I'm not accepting of that on Wednesday, when the trades were a little bit bigger. On Tuesday, there's only a couple of trades after the over trading level. The last two trades were quite silly trades, to be honest with you. It'd been a good day. I was up about 350, 400 points at that particular point, and bought some small positions, and they were small positions, going into the close, and ran those overnight into Wednesday. So that was the first significant loss on Wednesday morning. I've had to take a loss on both of those positions, albeit small. The first thing and this is something I've spoken to you about a number of times when you're trading the markets, and it's a pet hate of mine, but I did it on Tuesday, is I've carried a position over, and then on the Wednesday, regardless about what you think of the market's fallen, you're immediately protecting the position that you already have, and I think it influences the way that you trade in terms of the direction that you take in your trading. That certainly happened to me on Wednesday. You then get the over trading, you get the large number of trades that I'm executing, stops being triggered. And on Wednesday, if there was a day where everything that I did was wrong, Wednesday was that day. Stopped out in the morning as the market fell away, started to sell into a bit of a rally that we saw in the afternoon. Looked like I was going to get carried away on a bit of a short squeeze at that time, and then again later on in the afternoon getting stopped out as well. So no excuses, just wrong. In terms of a behavioural approach to Wednesday, there wasn't much that was correct either. Gone through too exposed throughout the course of the day, and when the stops had to trigger, they all had to trigger at once. The gold trades on Thursday again was a good day right up until the last minute. I was long futures from earlier in the day and had run those for most of the day, and as we got closer to the close, I decided to short the market. And did so in the belief that obviously that we were going to fall away. The market continued to rally. Effectively, my loss was encapsulated as soon as, or registered as soon as I took the short position. But if the market fell away, I believed that I was going to be able to buy one of the short positions back, and use the other short position to effectively close out the long position that I had at that time. The market continued to rally to the upside. I stopped myself out, as you can see, with a total of just over or almost 300 pips worth of losses in those last two trades, and spoiled what was a very good day up until that point. And for me, they were silly trades. Whilst there was some logic behind them, they weren't necessary, and I shouldn't have taken those trades. The trades today, another trade there that I'm just going to highlight. You can see the DAX and the Dow trade that I was stopped out of. You look at the stop levels, fairly close to the high. In each of those markets, the market subsequently turned around. We're back down where we're trading now, and had I not been stopped out on those trades, those three trades, you're looking at the best part of 510 pips worth of loss on those three trades. We could have seen a very significant return today, and unfortunately don't at this point. So the grand total of all of that, if you like, is that there's 1,772 pips worth of losses. There was a number of silly trades during the week. We reverted to trading in smaller size from Thursday morning. I was overexposed on a number of occasions during the course of the day. And one of the things that I want to go on and talk to you a little bit about now is the psychology of trading and what that did to me I can't explain what it does to you unless you want to share some of those thoughts with me, and there is always the opportunity, as you know, to ask questions during the course of this session. In terms of how it affects me from a loss perspective, and I think it is always important to put things in context, and I know during the course of the week I got some nice messages from a number of you, which I think is important. Number one, makes me feel a little bit better, but in no way, shape or form does it lessen the pain. The pain is there, and it's obvious for each of you as each trade goes down, but to put it into a context, I look back over the results since the beginning of September, and if you look back over those 8 or 9 weeks, I think it was, the total pip return over that period is positive, and it's 2,105 pips to the good. So even though that we've had losses in the last 2 weeks, totaling about 2,500 pips, which isn't good, the overall return since the beginning of September is significantly positive, and that's good. And as I mentioned at the beginning, as a total of 38 weeks since we started this business with Bull and Bear, there have only been 6 negative weeks overall. The last 2 weeks within that have been the most significant, and that's the thing that I'll be eager to turn around as we start next week. The positive, I suppose, as we're starting next week, or the positive for you, not necessarily the positive for me, is that I have a colonoscopy on Monday, and that means I avoid the statistically worst day of the week for me, which is Monday. So there won't be any trading on Monday for those of you who are eager to do something. I will write a market comment in the morning and give my ideas around that in terms of the way that I would approach the markets, but I won't be executing any trades myself on Monday. It will be we'll be waiting again until Tuesday. So to talk a little bit about the psychology, because I know this is something that all of you are interested in. Very negative emotions on Wednesday, both on Monday and on Wednesday, with the trades going significantly against me. I think one of the things that first happens when you find yourself in a loss-making position is that quite often that you freeze. You don't take the actions that you should be taking, and you start to make even worse decisions, and that can lead to a number of things during the course of the day. But for me, where I look at the psychology of the trading that's gone before me this week, it's more how you react to it going forward. And what I've seen certainly over the last couple of days is you become a little bit trigger happy when you have a profit, and you don't maximise the return, and equally so in that act of freezing and not reacting as you should, sometimes you allow the losses to run a little bit further, because you've seen the market turn around so many times over the last number of days, and usually significantly in your favour, that you start to hope for one of those to occur and rescue you. Neither of those are good patterns of behaviour. Unfortunately, they both happen to me. Not consistently over the course of the week, and certainly not consistently over the last couple of days, but you can see those sort of things occurring, and you do need to guard against it. So as much as it's important that for me, not necessarily for you guys, but as much as it's important for me to get back on the horse and start riding again after a fall, it's important as well that you notice some of the less agreeable or the less advantageous behaviours that have started to come into your trading. So it's good for me, I think, that over the course of this weekend, it's effectively going to be a long weekend, and that I'm able to address some of the trading that's gone on during the course of the week, but equally so some of the behaviours that have led to many of the situations that I've already spoken to you about during the course of this session already. So yes, very negative week, not hiding from that. not what I would expect, and not what I certainly not what I expect to continue. So definitely an occasion to look back over the trading over the course of the weekend, and hopefully come back stronger next week. The trades over the last couple of days have been a bit smaller, but it's important that I get back to a profitable weekly returns from this point, and that's what I'll be looking to do over the next couple of days. There are a couple of questions that have come in that I was looking to address. I might not have the time just now. One of the last trades that I did, which was one of the questions that I was asked earlier, was about the DAX. The DAX is a slight. The DAX will be closing within the next few minutes, or has already closed. I'm not sure with the clocks going back whether that's altered. I thought the DAX would sell off a little bit into the close ahead of the weekend, ahead of the elections coming up. I think the Dow will. I think we will test 26,000 again during the course of this afternoon session. So I have two trades left open. One of them that is in the DAX, which unfortunately is a bit stronger than I was expecting. The other is in the Dow, which I still expect to trade to back towards 26,000 before the close. And as that fear starts to escalate, we possibly see a bit more de-risking ahead of the weekend. We might see the Dow futures trade below 26,000. That's my time up. Thank you very much for joining me this afternoon. I will be back to trading on Tuesday, and we can reconvene next Friday to look at what hopefully